Bitcoin is clearly the winner when it comes to money. But what's unique about Litecoin is it was really built to be a partnership to Bitcoin, Bitcoin for larger transactions, Litecoin for smaller transactions. As more and more people own wallets, own Bitcoin, it'll have a massive effect.
I think for the first time, you have companies around certain blockchain projects like a Ripple that could do an IPO, but there's also that token that's connected to the ecosystem. Could we potentially see ETFs around these companies that have both a token and they're publicly listed?
Oh, absolutely.
This episode is brought to you by VeChain. VeChain is one of the top layer 1 enterprise blockchains in the crypto asset class, and they are getting adoption by many big brands and companies around the world who are building Web3 and decentralized application technologies. I've been a VET token holder for many years. In fact, I started investing in VeChain back in 2018. And some of the key features of the VeChain blockchain includes it's secure, affordable, scalable, fast, and sustainable. Some of the companies and brands working with VeChain include Givenchy, Walmart China, BMW, Boston Consulting Group, and many more. Most recently, they partnered with Dana White in the UFC, and Dana White even said recently that he purchased over $1 million of the VET token. And VeChain also recently launched staking, where you can stake the VET token and earn great rewards. So if you'd like to learn more about VeChain, go to vechain.org. Link will be in the description. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is Stephen McClurg, who is the CEO of Canary Capital. Stephen, great to have you.
Hey, thanks for having me, Tony.
Stephen, I'm really excited to speak with you. We were talking before the recording. I've wanted to interview you for a long time because Canary is doing some great things as it relates to crypto ETFs and ETPs. And before we get into all those details, tell us a bit about yourself and where you're from and your professional background.
Yeah, absolutely. So we're headquartered here in Nashville, Tennessee. I actually spent a lot of my earlier career in the LA area. Most of my career is at Guggenheim Partners. So I was a bond trader. I was a portfolio manager for large institutional portfolios. We acquired 2 ETF companies during my tenure there, which is how I got into ETFs. I moved over to be the portfolio manager for those product suites, and then launched some of our own flavors, which Guggenheim was really known for fixed income. And I launched all the first Guggenheim fixed income ETFs, mutual funds, some active, some passive, but a lot of it was a lot of fun. So anyway, they were very esoteric strategies. Then fast forward to when I got into crypto full time was in 2016, and I did a lot in the asset management space as well as security structuring and even on the development side of things. But when it looked like ETFs were potentially moving forward, we decided to get into that as well. My first foray into that was with Valkyrie. Where I was a founder, and we launched several Bitcoin-related ETFs through that firm, which was eventually bought by CoinShares. When I launched Canary, same thing. I was actually looking at just running a hedge fund, which is what I've done for most of my career. And we saw an opportunity for altcoin ETFs about a year ago, or a little over a year ago. So we started, moving forward there. We started off with filings for ETFs that were related to Litecoin, Hbar, Solana, and XRP. Those first 4 for various reasons, but here we are today. 2 of them are launched, and 2 of them have yet to launch, but hopefully they will soon.
Oh, absolutely. So, Stephen, with your expertise from the fund world and ETFs and much more, how are you looking at this asset class? And maybe that vision has evolved over time. Is this like the next macro trade, or in addition to that, the tech rails that the economy and markets will run on?
Yeah, I mean, I actually see this as a very easy macro trade, first of all, just given that a lot of these tokens have a very direct relationship to M2 monetary supply. So, for instance, that usually helps all risk assets go up in dollar terms or in other currency terms. Crypto falls into the same boat, but it's a little bit more clean. But the reason why I got into it to begin with is really a lot of its global monetary rails,
Mm,
and that's what's really important. So when people talk about what drives price, it's really a function of two things. Bitcoin's the easiest to explain because the function is, okay, what is its relationship to the dollar? And if more dollars are being printed versus a fixed supply of Bitcoin, then obviously Bitcoin goes up in price. The other major factor that's been a greater factor in the early years and less of a factor now, but it's still a strong factor, is access to the ecosystem. So as more and more people are onboarded into having Bitcoin wallets and to use them, whether it's for savings or spending, then that uh, network effect actually causes the price to grow because more people are involved in that. It's no different than looking at, say, the Swiss franc versus the US dollar. The
sure.
more people, global citizens that use the dollar contributes to the value of the dollar. And then the Swiss franc has a smaller set, or Singapore dollar or whatever it is, has a smaller set of users, so it's not going to be quite as valuable. So as more and more people own wallets, own Bitcoin, are onboarded, it'll have a massive effect. And over time, that effect goes down because law of large numbers kicks in, and a smaller percentage of people continue to be onboarded.
So on that note, if we double click a bit on network effects and like Metcalfe's law and Reed's law and so forth, when you're analyzing a token for a specific blockchain, are you looking at like you said, on-chain activity, number of wallets, number of users, maybe daily active users, monthly active users, things along those lines?
Yeah, so we're not only looking at that, but we're also looking at what the potential is, right? So that
Mm,
was one of the things that drew me to Bitcoin was the potential of more and more users coming in, opening wallets, transacting, or just simply holding. And if you look at all the other various tokens, there obviously is a number of wallets, a number of individual unique users that are actually either holding it or are developing it. A lot of developers will hold the tokens that they're developing blockchain,
mm,
for future gas fees. So you have that, but then you also have to think about the potential, right?
sure.
And I hate to say this because ETH was really early in kind of like in dApps as far as protocol goes, but the potential has run out. And the potential has now moved to, other chains and other areas, depending on what people are interested in. And this is why we like things like, Hbar, XRP, Sui is another good one that we like a lot. Even Solana. Solana still has a lot of potential. There's a lot of people on it. There's still potential of more users, more dApps. But something like Sui that's I would say a direct competitor to Solana probably has a higher potential because it isn't fully realized yet. Whereas like something like HBAR, you've got not only enterprise people that understand enterprise value and enterprise users using it, but also the potential for enterprise or XRP financial rails.
That definitely makes sense. Now, since you mentioned some of those tokens like HBAR, Litecoin, XRP, let's talk a bit about those. Based on what you just discussed, was that part of the analysis to launch products around these given, or were there additional things as well?
Yeah, I mean, what we tried to do is find, in the initial four, we were looking for, category winners, right?
Mm,
Now, Bitcoin is clearly the winner when it comes to money. But what's unique about Litecoin is it was really built to be a partnership to Bitcoin, Bitcoin for larger transactions, Litecoin for smaller transactions. But also, what makes Litecoin a little bit unique is that they have implemented Mimblewimble, which is a privacy feature that Bitcoin doesn't have. So you do have the option of selecting privacy for some of your wallets. Now, it isn't fully integrated across every wallet yet. It's people have to choose to, but privacy is becoming a really important factor even in the last year.
mm.
One of the things that's been a high correlation to people just buying gold in other countries has been to buy privacy tokens like Monero, Zcash, and even Litecoin. So we see a potential there on the privacy side, and privacy has really taken off in the last month.
Oh yeah.
So we see that as an important category winner there. XRP, the category winner for financial services, in my opinion. HBAR, category winner for enterprise. And then Solana, in my opinion, is still the next category winner for broad open source protocols.
Absolutely. And I apologize that I don't remember this at the top of my head because I remember reading it, but it escapes me. Your ETF products, their spot, are they launched under the 33 rules or the 40 rules?
Yeah. So, and maybe I'll explain the difference between those two. So, 40 Act is a 40 Act ETF essentially is an ETF that holds a good portion of it in actual securities. So, you have to have securities in the vehicle in order for it to even be under 40 Act. 33 Act is for non-securities. So we filed all of these under under 33 Act because they're all pure spot and we don't believe any of them to be securities. Now, there are some 40 Act ETFs out there for crypto, but what they are is not quite so clean. So, for instance, when I was leading Valkyrie, we launched a Bitcoin futures ETF because that's what the SEC was accepting before spot.
Right.
And that was under a 40 Act wrapper because of the nature of how you hold futures in a product. You're essentially holding securities, using that as collateral to buy the futures. So some of the ones that you might see out there today that are 40 Act is a combination of things like futures, swaps, offshore vehicles that might hold spot, or a fund of a fund type situation where it's holding ETPs from another country. So, the reason why we didn't go the 40 Act route is because it is a bit more expensive than going pure spot. Pure spot, it cost us less, and we can, of course, pass that on to, our customers in terms of fees go. Whereas if you notice 40 Act funds that are trying to mimic spot are a little bit more expensive, and they're also not a pure one-to-one.
Got it. Thanks for clarifying that. I know a lot of people get confused, even myself at times. Now, there have been talks, and I saw the folks at Canary Capital post on X that the XRP ETF may be coming soon. I know there's probably not a lot you can say because it's still something that's not launched yet, but tell us about when we could potentially anticipate that and what that product would look like.
Yeah, look, we can't really name an exact date yet, even though we internally know what the date is.
Sure.
We have very high hopes that that this does launch very soon. But it is coming soon. And if you kind of look online and do the math, you can probably figure out what that date might be.
Sure. Dumb question, Stephen. There has been the government shutdown. So folks were wondering, did you already get pre-approval of these from the SEC before the government shutdown, or you don't need the exact approval given the recent ETF listing standards update from the SEC?
Yeah, so when you file a 1933 Act ETF, you typically file under two different scenarios. One is what's called a delaying amendment, and you typically want to file a delaying amendment anytime you have to sort out rule changes with the exchanges. So this was the whole drama around Bitcoin. You had to file this 19B4 in addition to the ETF, which means that you're applying for a rule change with the exchange that you're using. In our case, it's NASDAQ. And then once that rule change is approved to be able to list that particular underlying token, which in that case was Bitcoin, then the SEC will make effective your S1 prospectus, right? And in the meantime, they're giving you comments, making sure that they're reviewing it. They're like, hey, can you add this disclosure? Can you add this? Can you fill in this blank? Can you clarify this statement that you made? Those are all part of the comment process. So initially, all of these ETFs are filed alongside a 19B4 for rule changes. And then what happened was the SEC created what was called the generic listing standards. That way you don't have to apply for a rule change because the rule already exists. So under the generic listing standards, essentially, any spot cryptocurrency that has a futures associated with it trading in the U.S. for more than 6 months follows that rule. So in this case, all of these follow that rule. And then, under normal circumstances, you want to continue to go through the process, having SEC review, and then they will make you effective. Well, Many of these products were, in my opinion, essentially ready to go. They'd gone through several rounds of comments with the SEC, um, uh, court fin staff, and the government shutdown actually slowed everything down.
Mm.
Well, the SEC put out guidance saying that, well, look, even if we're shut down, it doesn't mean the market should be. And they put out guidance to simply remove the delaying amendment and make it what's called an 8A filing. So we did that with Litecoin and Hbar ETFs first, because those were the two that were furthest along. We had filed them over a year ago and have received several rounds of comments.
Wow.
And then, as you may have noticed, some people did that with Solana. We paused on Solana just because of the staking, even though we felt like it was essentially ready. And then when we saw others go, we followed. And then with XRP, we felt like that was always, that's been ready to go for a while as well. So we went ahead and changed that filing for that ETF so that we're now relying on an 8A as opposed to a delaying amendment. And what that does essentially says that, hey, you become effective 20 days from when you refile a complete filing with the with the SEC. So yeah, we did that way back in October, and we're coming up close on that 20-day period.
Oh, for sure. Now, you mentioned staking, and we're recording this on Monday, November 10th for those folks who are going to be watching and listening to this. And I would love to get your take on staking in ETFs and ETPs. But also, we got some big news from Scott Bessent. It was saying the U.S. Treasury and the IRS are giving clarity to allow staking in ETPs and much more. I would love to get your take on both items.
Yeah, no, that's fantastic. And of course, Tony, as we discussed earlier, before we came on, that tweet had just gone out, and I probably only read about 10% of it before we got on. But it is really important, because what we have to do right now when it comes to staking is we have to come up with a formula. And by the way, we had already cracked this code within a grantor trust structure. So I actually launched the first crypto grantor trust that had staking in it. This was several years ago. Working with working with tax experts, and we structured that 4 years ago. And given that ETFs, 33 Act ETFs, are essentially grantor trusts, we had already solved that issue, had already structured a way to do it, and really all we needed to do was just get that extra legal opinion from the tax side of things, because it's one thing when you're doing in a private grantor trust, a whole other thing when it's an ETF with hundreds or thousands or tens of thousands of people investing in it. You want to make sure that everything is right. Again, that's something that has taken a lot of time and energy and structuring and of course cost and legal opinions. But if really clean guidance comes out, it saves us that effort, and I think it helps the whole ecosystem and being able to take those rewards for staking on the network.
And do you anticipate, as staking, the clarity starts making its way through the market, issuers like yourself start integrating these things, that we may see even more inflows into like Ethereum ETFs and Solana ETFs and so forth, because you now have the confirmation that staking is okay, but you got that built-in yield that's running 24/7 and earning that passive reward, if you want to call it that.
Yeah, and I agree with that. So we actually filed the first. We actually filed for the first Solana staking ETF. And I think at the time a lot of people were a little sketchy about doing that, but we were pretty comfortable. But what I will say about that is, even though we had cracked the code, we believe a lot of people would be interested, a lot of institutional investors would not be interested, because even though we say we've done it, we've got a legal opinion, that only goes so far. People want real assurances, and if you've got a real guidance coming out of the IRS and the Treasury Department that, hey, this is the way it works, and this is how you're going to be treated from a tax perspective, you will see a lot more institutional investors interested in investing.
Oh yeah, the clarity is so important, and I'm assuming just spitballing or guessing here that some of the guidance here that Scott Bessent put out, I'm assuming that he might put that in the Clarity Act, which is currently in the Senate. This way, I don't know if they need to, but I think it would make sense.
Yeah, I agree. I agree.
Now, with all these different types of ETF products that you're launching, and you have extensive experience with these products, are you planning to launch, let's say, index or basket ETFs?
Well, we actually have already filed for one. We do have a little bit more work to do on that, and we haven't been able to move forward on that at all since the government shutdown. Again, so some of the ETFs that we filed for in 2024 that has already had several rounds of comments, and those were easy to get out during the shutdown, but pretty much everything else is on hold until the government reopens and we can get regular comments back from the SEC, and we want to make sure that we're fully compliant there. So we definitely have to wait on that, but we have filed, and we hope that moves forward pretty quickly once the government reopens.
Now, we've seen incredible growth for these ETF products around crypto. Stephen, as there are more being put out there, because there are a lot of crypto assets, and look, I'm not necessarily saying we're going to have 1,000 ETFs for all the 1,000 coins, but with the records that are being broken here, are crypto ETFs going to dominate the ETF market?
I think for a short period of time, because it's a new asset class, it probably will. But what I will say is that, it's not going to be everything, right? So,
Sure.
So far, you've only seen things in the top 20. And, I think once you get to like maybe the top 30, it starts falling off. And I don't know if anything beyond that is going to be viable. It could be, there could be a few here and there, but it's not a really clean pattern of, okay, these are the top 30 that are going to win. It's going to look a lot like, it's going to look a lot like the ETFs for commodities and metals. So, gold obviously dominates. Silver is pretty popular. And then you start getting down to like copper, magnesium. I mean, you start getting into fringe metals that people aren't really speculating on.
Right.
And these are very, very small ETFs that people don't care a whole lot about. I think crypto is going to look the same way, where you're going to have a few that really dominate, and then kind of a few that's more mid-tier. And then there'll be a few launches that I think will just absolutely do nothing. And by the way, I'm not the expert, because I've launched things that I thought were going to kill it, and it doesn't. And then I've launched things that I thought were kind of meh, and they end up killing it. So you just never know what the market's going to like and accept. There's some things that you have a strong conviction in, like, okay, Bitcoin, XRP, market's going to love those. Other things. Look, by the way, Hbar. I had a very strong inclination that it was going to do quite well. And it even exceeded my expectations. I was expecting about 50 million in which is a lot. Launching an ETF and getting 50 million in 3 days is unheard of.
Right.
And we got 70 million in 3 days. So, that's really exceeded expectations. And it's like number 20 as far as market cap goes. So, it just goes to show that it's much more of an institutional product. People that are that have brokerage accounts, they know it. They know the name. It's not as popular within crypto circles, but it's very popular outside of crypto circles, and that's really important, right? Whereas like Solana, Solana launched last week, and yeah, it was a great launch. It was, but it's also what is it, the fourth largest cryptocurrency by market cap,
right?
But it didn't perform like it was. I think it could have been bigger. So it just goes to show that crypto people really love Solana, but people outside of crypto really don't know it. And that's what, is really going to mix things up.
Oh, for sure. Something that came to mind as you were talking about that, I think for the first time definitely for the first time, you have companies around certain blockchain projects like a Ripple that could do an IPO, but there's also that token that's connected to the ecosystem. You also have exchanges that could do that. You had Binance and BNB, and then Coinbase, they're public, and then they're talking about, they're floating the idea of launching a token. could we potentially see ETFs around these companies that have both a token and they're publicly listed?
Oh, absolutely. I think you'll see one of each. And then, I mean, there's so many ETFs out there even today that are all they do is hold companies that are in the cryptocurrency ecosystem or the blockchain ecosystem. So you'll see that, and those are going to be more for equities, and they're going to see more some that are more for tokens for sure.
Would it be possible to merge them together, or maybe not because they're different assets?
I mean, I think you could. It wouldn't shock me if that does happen. I mean, I've actually seen some ETFs that have. I mean, let's take MicroStrategy for instance. I mean, MicroStrategy is essentially a levered Bitcoin ETF.
Yeah.
And that is included as an equity in, and other equities that do things more, as far as building in the ecosystem, whereas MicroStrategy is kind of like a buy and hold and leverage.
Yeah, that definitely makes sense. So since we're on that topic of MicroStrategy, there's a big talk right now about DATs, digital asset treasury companies versus ETFs. I would love to get your take on that. And do you see them running in parallel side by side, or the ETFs are, maybe a far more superior product that people trust, and DATs, they'll have a sliver of the market?
Yeah. Look, I think a lot of DATs out there, for better or worse, there's a lot of leverage.
Mm.
So they're actually paying people to do things. But if you just want like a pure play exposure to a token, ETF is far more of a superior product. I mean, I've seen DATs, that come across my desk that are like, okay, we've got this massive management team. We're going to pay bankers 5%. We're going to pay these people 5%. We got lawyers. We're going to pay an asset manager. I've seen in some cases 3 to 4%. So what they're paying for an asset management fee to just like buy tokens. So, I mean, at the end of the day, you're putting in $1 and you're getting 85 cents back. And it's a very inefficient vehicle unless they're doing something special. I think MicroStrategy worked because they were kind of early, and they had this operating company that was profitable. And then as time went on, the gains in Bitcoin outperformed the operating company, but the operating company covers the bills. So it's like there's not a lot of drag there. But I've seen some of them where it's like, okay, we're taking 15% off the top, and you're lucky to get 85. So yeah, DATs are interesting. They're not one size fits all.
Right. And I'm a big concern, Stephen, because it feels like there's a little bit of a bubble forming in that area with DATs. And I'm concerned what's going to happen when a bear market or a major market downturn happens. Like some of these could potentially collapse.
I mean, I think the bubble's already popped. I mean, look at some of these DATs that have come in quite a bit. And I mean, look, I get calls every day from bankers wanting to participate in a DAT, and I haven't seen any of them get off the ground in the last month.
Mm.
So I think that market's run.
Oh, for sure. What's on your roadmap? I'm assuming there's plans to launch additional altcoin ETFs. You mentioned like you guys had filed for the basket ETF as well. Anything else you want to highlight?
Yeah, I don't anticipate doing a whole lot more beyond some of what we've already filed out there. There might be some things here and there that I think are interesting. But look, I mean, I'll just talk about a few other, like Avalanche. I know a couple of people filed for Avalanche ETFs. We probably won't file for it. Not that we don't love AVAX and we don't love the team, but like, we're not going to compete with two other issuers that have already done it, given that it's, about number 20 in market cap.
Sure.
Just like with some of the things that we've done, we haven't seen other people file because, okay, yeah, the Canary guys are doing that one. There's probably not room for 2 or 3.
Yeah.
And we're saying the same things, right? Height is another one. A few people filed for that. Avalanche. We're just, if you're coming in second or third, it's, second, maybe third, not worth their time.
Question that just came to mind. So as we build out these altcoin ETFs, let's say, unfortunately, one of these blockchain projects fails, right? And that's a real possibility, just like companies in the real world can fail. What happens in a scenario like that? How does that get liquidated and funds and all these things? Or is it just an inherent risk that, when you're investing, that's part of the game?
Yeah, no, I think that's an inherent risk when you're investing. I mean, these are passive products, so people do need to do their own work and make sure that it makes sense. I mean, we're trying our best to be a screener to make sure that that we follow the project, we know what's happening there before we agree to do it. And there's some things that are just like meme coins, right? Like
Yeah.
there's been filings for Doge, for I can't remember if there's been a Shiba one or not. But there's been some other meme coins that are out there, and meme coins aren't really a project. It's culture. So you've got to decide if you think that it has staying power or not, right? So I do expect to see a lot more memes. Now memes are actually meme coins are safer from a security perspective because the SEC declared that they're not securities. So that one's super easy, but they are cultural, and culture does change. So we'll see what happens.
That's a great point. Yeah, it's so fascinating though, Stephen, to see. Well, I guess it's a natural evolution of the internet because there's memes online, and we know how that culture has expanded online and in different ways. But now you can financialize it on the
Yeah.
blockchain, and it can have a global reach. It's just a crazy concept, but it's incredible.
Yeah. Well, it's no different than art too, right? So if you think about it, there are financial products that hold art,
Mhm.
publicly traded funds.
Yeah.
And art is a cultural phenomenon. Different people like different things, and if it goes out of favor, it goes out of favor. So art generally holds its value, generally goes up in value, but it could go out of favor very quickly. I
Mm.
mean, here's a good example. There was actually a company that all they did was hold a bunch of uh, Charles Schultz drawings. The Peanuts, Charlie Brown.
Oh yeah.
And it kind of went out of favor for a little bit a few years ago, and that company went down like 80%. So it's no different than things that have already existed. It just happens to be, in the world of crypto.
Oh, for sure. Yeah, well said. I'd love to get your take on what's happening with TradFi's adoption of crypto. Stephen, this year it seems like we've seen a lot of the naysayers do a 180, Jamie Dimons and all these guys. But all the banks, all of the major Wall Street firms are now tokenizing, looking to launch crypto trading, even the likes of Vanguard capitulating, right, to allow their clients to trade ETFs and much more. What are your thoughts on how these folks are adopting crypto?
Yeah, no, I think it's great. I mean, I got into tokenization back in 2017, and it was just way too early. And so we went through, we figured it out, and then there was just no market for it. And it seems like there's finally starting to creep in a market for it. When you have large players that are jumping in doing tokenization that control two-sided markets, then you will see transactions starting to occur. And I think what's happening is a lot of the large banks have realized that, look, tokenization of assets is a way more efficient form of trading and creating baskets. And if we can get in front of this, then we can put in esoteric assets that people want, and they can trade freely 24/7. So that's probably the biggest driver right now. And by the way, that's one of the reasons why Solana is super interesting, because it is so involved on the tokenization of asset side of things. And same thing with SWE, with Injective. They're really important on tokenization. But then if you even get back to like XRP, XRP is building out rails for tokenization of any kind of financial instruments, such as they just launched a stable coin this year. So and that partnership with Gemini, I think, is super important. So there's a lot happening there that is it's really going to be quite interesting to see several years later.
Yeah, and it seems like the move to tokenization is to kind of mimic what crypto is doing, because crypto has been the 24/7, 365 day market, no opening or closing bell, no holidays. And now TradFi wants to go 24/7, and then it also opens up a global market, more liquidity coming from different parts of the world.
Yeah, that's right.
Yeah, it's fascinating. I can't remember who mentioned it, if it was Larry Fink or someone else, but the folks are looking to tokenize ETFs. What are your thoughts on that?
You know, it's interesting because here in the US, I think ETFs trade at decent hours.
Hmm.
Um, where I think tokenization might work though for ETFs is globally. So, for instance, our checks in out of the UK has tokenized a few crypto ETFs, including Hbar. And what that does, it allows people in Europe to trade these without having to go through their local exchanges.
Mm.
So that's actually really important from a global standpoint. I don't know if it's that, in the US, we tend to think in US terms. It's like, okay, well, how's that useful? Well, for other people, it's very useful that can't, that don't want to be at the up and, New York hours trading.
It's kind of crazy. I think sometimes about this where it's a 24/7 market. Are we going to drive ourselves nuts? Maybe we have AI helping us trade while we're sleeping.
Yeah.
But we'll have to see how it all falls into place. I did want to get your thoughts on this, the Clarity Act, right? That's in the Senate. The government, we're still waiting for that to be reopened, hopefully today. And the Senate could get that through, and President Trump signs it into the law. What are your thoughts on the impact that will have on the industry and innovation and building and much more?
Yeah, look, I think it'll be pretty important. I think a lot of the impact from the potential of the Clarity Act passing has already been priced in. And I think, a lot of people care about price. But also, we've received a lot of clarity, regulatory clarity outside of the Clarity Act. So it really all it does is formalizes it. So, under this administration and under this SEC, we have seen very pro crypto policies and actions. But this will codify most of that into law so that under the next administration, if it's somebody that's not so friendly to crypto, it'll persist as law. So I think that's really where it's more important is 3 years from now as opposed to next month.
Yeah, that definitely makes sense. And to your point, folks, the spirit of the law is out there where folks are like the banks and these guys are starting to innovate and build, even though they haven't put anything out to the public necessarily. I think they see that it's coming. It'll be written in stone, so to speak, and they don't have to worry about getting a lawsuit or whatever it may be.
Yep, that's right.
All right, Stephen, great stuff. I love what you and the folks at Canary are doing, and I'm looking forward to the launch of the XRP ETF and the future ETF products. I've often covered you guys in the news and all the things you're launching, but I got some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
Oh wow, that's an interesting one. You know, the two things I like to do probably the most is work on old cars and shoot guns. So that'd probably be my metaverse. I'd just be out in the country tinkering on old trucks and hunting.
Can I confess something? And I've spoken to my wife about it. I told her if my portfolio gets to a certain amount and cash out, be prepared. I'm going to buy a couple hobby cars and I'll be working on them because I love cars and I watch videos of people fixing and bringing to life old cars and I just love that. So I would love to have like a '67 Ford Mustang or something and just be a project I work on.
It is one of my favorite things to do, and I learned by watching my dad growing up. Because he was a mechanic, an engineer, and he would always he'd get bored and like drive to the junkyard and pull a car out and start and, make it run. So, but yeah, I had a COVID project where I bought a '71 Scout and made it run. It was a lot of fun. I drive it around. I haven't finished restoring the outside of it, so it looks like orange with, that 1971 orange with paint peeling off, and you see splashes of gray and some rust. But like it drives great, and I have fun driving it around.
Oh yeah, I love it. I like the idea of engines and working on them, and I'm fascinated by how it all works. So I'm with you on that. Rapid fire questions. Favorite food?
Pizza.
Favorite musician or band?
Led Zeppelin.
Favorite movie?
Zoolander.
Favorite book?
Thinking Fast and Slow.
I think you answered this, but when you're not working, what are you doing for fun?
I go to the gym. That's about it. I'm a big gym rat.
Nice. Stephen, absolute pleasure. We're going to have you back on as you guys launch new products, but thank you so much for joining me.
Great. Thanks for having me, Tony.